Good morning, everyone. Welcome to Options Trading 101. And this is like literally starting from the beginning, like even what is an option. So if you have any stocks in a brokerage account, you might have heard at some point about options trading. And not too long ago myself, I thought it was a very scary thing. I was very skeptical about it. And I learned now that it is real. It's a real way to make a little extra money and, have some extra spending money for yourself. So if you are super conservative, like I am, and if you are very careful, like I try to be, then you can actually make quite a bit of extra pocket change for yourself. And I know some people claim that they make thousands and millions of dollars, and that's so great for them. And I really hope that is true, that they're actually doing it like that. But, for the normal person who might have just like an extra few $1,000s in savings that they want to make maybe a better return than they could on a regular savings account at a bank, then this is the way to go. So first of all, you are going to want to open a brokerage account in Robinhood. And you're going to want to make sure that your account is set up for trading. So you go to your account, settings, scroll to the bottom, apply for options trading, and make sure that you put in that you are making an income and that you don't have too many people to take care of. I know people who have gotten denied for putting that they're unemployed, for example. Not smart. Even if you are unemployed, you're not going to want to tell them that because they're going to deny you. So even if you can say you make some kind of like like 1099 income or anything like that. But anyway, so apply for options trading. If you can get to level 3, that would be the best because you will be able to do a lot more trades on spreads, which we'll get to in a later video, than you would with just regular trading options. So try to get to level 3 if you can. If not, level 2 lets you trade options, sell cash secured puts and covered calls, and that would be that. So what you're going to want to do first is learn what is an option. So an option is you're giving somebody the right to either force you to buy shares of a stock, that would be called selling a put, or you're giving somebody the right to take your shares from you, and that would be selling a call. So all this is going to be about selling. I don't buy puts, I don't buy calls, I don't get into all the technicalities, I don't have time, and I'm just very conservative with selling. And if you think of the word sell, when you sell something, you make money, and they call that premium. So every time you sell the right for somebody to force you to buy their shares, that would be selling a put, you make money. If you have the shares already and you are selling the right for somebody to take those shares from you, that would be selling a call. So eventually you can do what's called the wheel strategy, where if you sell a put and the next week you sell the same put and you sell the same put, and all of a sudden you got assigned, which means somebody forced you to buy their shares. Now you own 100 shares of that stock. 100 shares equals one option. And now you own the shares. Now you can right away turn around and sell a call. You can sell the right for somebody to buy the shares from you at a certain price. So I've actually been doing this with JetBlue and Warner Brother Disney recently. I got assigned 4 options on Warner Brother Disney recently. Right away, the next week, I turned around and I started selling calls for the same price that I was assigned the shares. And I'm going to keep rolling it and rolling it and rolling it until somebody actually calls away from me. Maybe they never will. But in the meantime, I'm going to continue to make premium every week. I'm going to continue to make some money every week on this trade. So let's go back to the screen here. Now in my Robinhood account at the very moment, I don't have much cash to play with because everything's kind of tied up already. You'll notice over here, these are your positions. These are all my options. These are my stocks. I have these shares of MBT, which are like not tradable at the moment. So I can't sell them. I can't buy any more. I can't trade options on them. I don't know what's going on with MBT, but I'm hoping one day that I'll be able to actually sell them because that would be a nice bit of money here to play with. But anyway, at the current moment, I only have $363. So at this point, what I would do is just check on my current options, make sure they're not in the money, meaning make sure that they're not in a position where I'm going to get assigned. So, for example, I have 2 puts out on JetBlue for $6.50, expiring this Friday. So let's check on this. So currently, JetBlue is trading at $6.80. And because I'm selling the right for somebody to put this to me at $6.50, I could sleep well at night knowing that I'm not going to get assigned on this, because why would somebody force me to buy JetBlue shares at $6.50 when they can just sell it on the open market for $6.80, right? So as long as my put number is below the stock price number, I am golden. So I just have to keep checking on this, every day to make sure I'm in a good position. And then I don't have to do anything. I just have to wait until December 23rd and let it expire. And then I'll keep the premium that I already collected, which was $9 per option. So there's 2 options here. So I collected $18. And then next week I can go ahead and sell another put on JetBlue if I want, because then I'll have the cash to do so. So another thing I wanted to review here, and it's kind of hard to tell, but when you sell a put, you have to have the cash in your account to make sure that you can actually buy the shares at the strike price given. So because my strike price here is $6.50, I need $650 to be able to buy JetBlue. And because I actually have 2 contracts out, I need $1,300 in order to be able to buy JetBlue at $6.50 if I get put it. So that's why I don't have much buying power here right now. But come Friday, I'm going to have $1,663.13 because they're going to add that 1,300. It's going to get released back into my buying power. And then next week I can turn around and go ahead and sell another put. So Warner Brother Discovery, this has been tricky. This one's been going down. So I've been rolling it. And what that means is I originally I originally sold the put at $11. And as you can see, Warner Brother Disney is now $9.55. So I'm in a position now where I could get assigned. Somebody can put me Warner Brother Discovery at $10 and it's only trading at $9.56. So if I were to get put this and I wanted to immediately sell the shares, I would lose money, but I wouldn't do that. I would keep them and sell calls. So let's see here what we can do. And it's really easy on Robinhood. I highly recommend Robinhood as a starting brokerage firm because it's just super, super user-friendly and very easy to navigate. And I'm not getting any money from this from Robinhood. I wish I was. Maybe eventually I will. But it's really great. So right now, like I said, I own, let me see here, actually. I have 2 puts out on Warner Brother Discovery expiring January 6th, 2023. Now I can just let that sit there and hopefully by January 6th, Warner Brother Discovery will go back up to above $10. But the way that the market's going, I can't count on that. So this is a little bit, well, I don't want to say advanced, because if you're going to be selling options, you're going to want to know how to get out of your current position. I mean, that's super important, because you don't want to ever leave yourself in a position where you can get assigned. That happened to me on one of my first trades. I actually called Fidelity, because I have a Fidelity account as well. I called them and asked them what I can do. They basically said, "Oh, just let it expire." This was a call that I sold, and it was in the money. And they said, "Oh, let it just expire. You probably won't get assigned because it's such an expensive stock." It was United Health Group. And of course, I got assigned. I got my shares taken away from me at a low price. And somebody probably just immediately turned around and sold it on the open market for a profit. But since then, kind of taught myself to make sure to know how to close out these options, whether it's by actually buying to close, like they give you the option here, or my favorite, which is rolling it, because you get to collect more premium when you roll. So essentially, when you roll a position, you are technically buying to close your current position, but then at the same time, in the same sale, you are selling to open a new position. So I'm going to click on the roll this position here. Again, I love Robinhood because they just make it so easy. It's like one click, right? So cash secured, put roll. My current position is $10, put at $10, expiring January 6th. What I want to do, and it automatically brings you to the very next week option. I want to roll this out and down if possible. So that means a future date and a lower strike price, because I don't want to get assigned. And, when you have these options out, of course, your money's like tied up for a certain amount of time. But if you really need your money now, you can just buy to close. You don't have to like buy to close and then sell to open a new position. But if you can wait, if you don't need your money at the moment, you can just continue to roll down and out and down, if you're doing a put. And hopefully by the time it actually expires, you won't get assigned. So let's see our options here. Our next option, out and down, is at $9.50. But as you can see, $9.50 is only going to give us a 55-cent per share credit. And to close my current position, it's going to cost 74 cents. So there's going to be a debit here. So a total debit, $38. I don't want to do that. I want a credit. I always want to get a credit. You never want to, especially roll a position for a debit. That's just like, you might as well just close the position if you're going to pay. So we're going to unclick that. I'm going to go out to January 20th. And let's see what the 951 is doing then. So we're getting closer to our cost, but still not quite. So let's go to January 27th, 950.68, getting closer. February 17th. Oh, now what happened here? So that's the thing. If you go out far enough, they don't give you every dollar amount option. And, to be honest, I don't know why this is. I think it's because at that time frame that far out, there's maybe just not enough volume, so they just don't put every strike price. Maybe I'm wrong, but that's what makes sense to me. Anyway, so we're here, January 20th. The best I can do is roll it out. Let's see if we even roll it out to the next week. So if I roll it out to the next week and I keep it at the same strike price, I'm still going to make a bit of a profit. And because I have, let's see, so there's a 9-cent difference here. That's a $9 per option credit, because you always do times 100. So 9 cents times 100, $9. I have 2 options out. So my total profit is going to be $18. So I could do this now and keep rolling it out until WBD goes again above $10. and then I can just let it expire. But I think I'm just gonna let this one simmer for a little bit and not do that quite yet. So the only other thing that I can do at this point in this account here is a spread. So we might as well get into it because it is one of the sort of best options for small accounts. So what it takes is it takes a lot less collateral, meaning I'm not going to have to put up a full amount to buy all of the shares. I only have to put up a fraction, which is nice. But as you can imagine, by only putting up a fraction of the money as collateral, you then only get a fraction of the profit. So it wouldn't be as much profit as a normal option, but something's better than nothing. The stock that I really like to sell spreads on, so this is called a spread, is Tesla, because Tesla, even on a spread, pays the best premiums. All right, so Tesla is like tanking, like it's totally like, ugh. I have so many other options out on Tesla on my other brokerage accounts, and it's like crazy. Like I keep having to roll it and roll it and roll it. And like I have some of my options expiring in 2024 now because I just keep rolling them out. All right, so what I like to use, the only indicator, like people always talk about indicators and this and that. And I'm just like, no, I don't have time for that. The only indicator that I actually use is Yahoo Finance, Bollinger Bands. So if you go to finance.yahoo.com and you type in your ticker symbol, you search it up and you go to chart, and you want to make sure, and it usually defaults to it that your chart is on the 3-month, and your indicator Bollinger Bands are 2 standard deviations. Now you can do 1 standard deviation. That just means that where the stock is on the average trading, this would be 1 standard deviation above and 1 standard deviation below. That's what they'll show you. Mine is set to 2 standard deviations, and that's a very, very conservative approach because like 95% of the time you will not get assigned if you go 2 standard deviations. So right now, if we go out to the 3-month of Tesla, they're saying that I should, if I don't want to get assigned, that I should sell a put. Where is it here? About 147. So I know it's hard to, it's up here, 140. Ugh, I can't get over there. But anyway, if you look at the Bollinger Bands, there's the 3 values here. Look next to Tesla, trading at 150, 113. Bollinger Bands, 201.15, 174.28, 147.38. I hope you can see what I'm seeing right below the 3M, right below here for this date. So what we would want to do is sell a put on Tesla. Well, actually, sorry, because Tesla is tanking, what we want to do is actually sell a call credit spread because it's much safer and you most likely won't get assigned. If you try to sell a put credit spread now with Tesla going so low, you might get assigned, you'll lose your premium, you'll have to pay the collateral, and it's not a good scene. So with the market going down, for your spreads in a bear market, you want to sell call credit spreads. So let's go back to our Tesla and Robinhood. We're going to click on Trade Tesla Options. And this is a 2-part process. So you're going to start by selling a call as if you own the shares. And then before you finalize your trade, you have to buy a call for the next strike price above or higher if you're very confident that you're not going to get assigned. The farther apart your strike prices on your spread, the more premium you'll make, of course, because it's more risky. But I don't have that much cash in my account at the moment, so I'm going to have to do a very small spread. So on the chart here, it's saying that I should trade about a 200 call. I mean, but a 200 call right now, if we go up there, you'll see that it pays very little premium. There's a 99% chance of profit. I mean, I don't need it to be that high. Okay. So if we go back here and we go to the 1 month, we'll see it's still at 201. But if we go to the 5-day, this will kind of show us better what Tesla's been doing as of most recent. So they're saying, okay, we can go to like 154. Now that's super, almost way too close to the money. I mean, you can definitely do that. You'll make a lot more premium that way. But I'm going to go to a chance of profit of about 90%. So we can choose like the 165, 167 or 167.50 to 170. So what I usually do is I like to see what the difference is here. So this is about 30 cents. So that's going to profit me $30 for this spread. This one here is 20 cents. So this one's going to profit me $20 for this spread. But this spread is quite a significant amount more conservative than this spread here. But I'll tell you something. What's going on with Tesla at the moment? It's like crazy. So I feel pretty confident that I can do the 165, 167 spread, and I most likely will not get assigned by the end of the week. So we're going to go first to sell a call, 167. Okay. So it's saying here my total credit is $108, but I don't own the Tesla shares to sell. So I have to buy a call, which means I'm buying the right to force somebody to give me their shares at a certain price. And so, of course, you have to go up to the next available dollar amount, because if you go down, you're going to want, now we're going to go on buy a call. If you go down, you're going to wind up paying. So that doesn't make any sense, right? You don't want to do that. So you want a credit. You always want to get a credit. So my total credit here is, now it's gone down. Yeah, because see, it's ever changing. Like even within just a couple of minutes that I've been talking to you, this spread value has decreased by $10 because the share price of Tesla went down by like $1. So, and let's see here. Yeah, my chance of profit is about the same still. So I'm going to keep that, and I feel pretty good about that. What else can we do here? If I sell the 162, see that to me, that's getting a little bit too close to the share price. And that's just me being super conservative. So you can definitely try your luck with an 84% chance of profit. That's still a really high chance of profit, but I'd rather be closer to the 90% chance of profit. So if I go ahead and press continue, now let's see here. So my profit is going to be $28. That's my premium. I just wanted to show you guys here. Okay, here we go. So the collateral on this is going to be $250 because my strike prices are $2.50 apart from each other. So I need $250 to even make this trade. And I have $363 available. So that's great. So I'm going to be making about $28, $29. If we pull out the trusty calculator, if I go 29 divided by 250, my rate of return is 11.6%. So I'm pretty happy with that in a 1 week time period. So I'm going to go ahead and review this order. Now it's saying low likelihood to fill. And that's just because my strike prices are so far away from the actual share price. But let's see what happens. So it's saying here, like I said, my credit is 28, my collateral is 250. I'm going to submit and see what happens. And it's pending. So it didn't execute. I might have to revisit this because it didn't execute and I'm not sure if it's going to. But a lot of people, what they'll do is they will immediately try to make a new trade. But I like to give it a couple of hours. It's only 10:15 in the morning. And, there's quite a bit of time for this to execute here. And so I'm just going to leave it and see what happens. So that's your basics. If I had $650, I could have sold a put on JetBlue. Oh, there we go. See it executed. Did you see that change there? So I just waited like 2 minutes and it executed. So if we go to here and we go to here, we'll see my credit was $27 and bada bing, bada boom. That's it. My buying power now went down to 140 because I have 250 in collateral out, which would bring it to 390. And if you noticed before, my collateral was 363, but I added $28. So it went up to a total of 390 minus my 250 collateral for my Tesla spread. Now I'm down to 140 buying power, but there's really no, let's see here. There's really no, let me try Warner Brother Disney. There might be a $1 spread actually available, and also JetBlue. I don't know why I keep saying Disney. It's Warner Brother Discovery. Oh, for the longest time, I thought it was Warner Brother Disney, and that was just totally wrong. But anyway, here we are at the Warner Brother Discovery. If I were to want to sell a put on Warner Brother Discovery for like $9, I would need $900 in collateral, but I only have 140. So let's go ahead and try to sell a spread. And oh, this is great. So the strike prices are only 50 cents apart. So that means actually I could sell 2 spreads if I wanted to, because I'll only need $100 in collateral. So let's go back to my trusty Yahoo Finance chart here. Type in Warner Brother Discovery chart. And let's go to 3-month first. So basically, if I started my spread at about 1150, so if I did an 1150 12 spread, highly unlikely it will fill, because in the last 5 days, the maximum for Warner Brother Discovery has only been like $10. So if I do an 1150 12 spread, that is very conservative. But as you can see here, the premium is quite low. That's why I really like selling spreads on Tesla, because it pays the most premium, even for a spread. Let's see, what is the spread detail? See, yeah, see, Apple is a $5. Oh, wait a minute now. Oh, it is a $1. So, okay. So this one might be okay. See, but it's still only $3. So I'll make like $3 putting up $100. So that's 3%. I mean, it's okay. It's not great. It could be better. Let's see what's going on with JetBlue. So JetBlue has about a 50-cent spread. But again, I would have to be super close to the money to make any kind of reasonable profit. So that's not a good investment. Let me try one more. Coca-Cola. And Coca-Cola is a $1 spread. But again, I'll have to be super close to the money being the share price, to make any kind of profit. So it's just not worth it for me. And, as soon as you go $2 out from the share price, it's like 0. So that's not good. Anyway, I hope you found some value in this video. I tried to make it as simple as possible. I'm so sorry I wasn't able to sell just a straight up call or put today because I didn't have enough cash. But I guess this was a really good lesson for people that don't have a lot of cash to play with, because there are options, no pun intended, for you as well in selling spreads. So please let me know if you have any questions. I would be happy to review everything that I've just said. And please let me know if something doesn't make sense. This is my first video on selling options, and I wanted it to be as simple as possible. And, I've been doing this for a year. I want to disclaim that I am not a financial advisor. I taught myself everything that I know. I've watched a ton of YouTube videos, and I tried to keep it as simple as possible because I'm a working mother and I don't have time for technical analysis other than my Bollinger Bands, which is really hardly anything at all. So please let me know if you have any questions, if you found value in this video, if you thought it was like simple to understand. I really appreciate if you like and share it, and I will definitely be putting out more videos soon. Have a great day.